Hello everyone. This video is going to show you how to complete the pro forma balance sheet after we have finished all of our operating budgets. So we're going to start with our cash. So we've got our assets. We're going to start with cash and then accounts receivable, inventory, equipment, and depreciation. And again, over here on the side, you will find the data source. So where are we going to find these numbers? All right, so let's start with the cash budget for cash. So what's my ending cash balance on March 31st? Well, it's going to be the pro forma data part G. So right there, that $12,612. So that's how much cash we have on hand right now. What's left in my accounts receivable? So for that, we've got to go all the way back to our sales budget. That was that very first one that we created. All right, so what's left in my accounts receivable? Well, that's this amount right there. Your sales on account, the pro forma statement data is at $363,000. All right, next we've got what's in my inventory at the end of March 31st. So that's going to be from our purchases budget. So right here, how much do we have left at the end of March? So what's my ending inventory? It's going to be that amount right there. And we've already used that one, so we'll highlight that as well. So it's at 78,500. And then we've got to figure out our equipment and our depreciation, and that comes from my selling and administrative expense budget. So right here, we've got to figure out, okay, well, how much do I have in equipment? Well, we find out from right here, our equipment cost is $100,000. So that's what we're going to put for our equipment. And then our accumulated depreciation is this part C right there. So we're going to take our $100,000 worth of equipment, and then we're going to subtract the accumulated depreciation of $2,250 for a total of $97,750. And when you add up the first three, or when you add up all of these four, you find that you should get $551,870. So now we've got to look at our liabilities. So our accounts payable is going to come from that purchases budget again. So what do we have left to pay off? Here's my projected purchases. So my required inventory purchases, what do we have left? We've paid off all of this stuff down here. So then part C tells us we have $88,890 left. So that's taking on what we have purchased and then how much we haven't paid off. So we haven't paid off that 30% of that 296,300. So that's where that 88,890 comes from. So that's what we start with down here. So next we need to look at our sales commission payable. So what commissions do we have that we have yet to pay? That's from that selling and administrative expenses budget. So here we are looking at, okay, how much in sales commission do we have left? That's this part A right there, 24,200. Our utilities payable, same thing. We're looking at that selling and administrative expenses budget. What do we have left in utilities? This is that part B right there. We owe $1,400 worth of utilities at this point at the end of March 31st. Then our line of credit liability. So this is going to be in our cash budget. How much do we still owe on our line of credit? So when we're looking through all of this, we find out that our financing obligation at this point is that $97,000. We still owe a debt of $97,000 to the bank. So then when we add all of those up, we find that our total liabilities are $211,490. And then for my retained earnings, we would need to look at, what did we have in our retained earnings before? But at this point, there are no prior periods because remember, this is the first quarter that we are in business. So we have no prior periods exist, time periods. And since we are not giving out any dividends, so no prior time periods exist and we're not giving out dividends. So our retained earnings equals our net income, which we can take from our pro forma income statement. So 340,380. And when we add those up, we get 551,870. So therefore you can see your total liabilities and equity equals your total assets. So our balance sheet is balanced. And that's how you create your pro forma balance sheet with all the information we've taken so far from our operating budgets.